I have a question here. Probably Angpo or Prachi want to take up. Why FiinRatings are rated so high, A class for those two securities company, especially at this market condition, a Vietnamese stock market, they mean. So anyone or Angpo or Prachi as the committee chairman?
I'll start. Yeah, I'll start and then hand it over to Prachi. The thing to note is, as we've said before, brokerage companies exist in a very volatile business. The market, you can count on the market going up and down, volumes going up and down, and that's life in a brokerage. And the question is, does the brokerage and its business model cater for that volatility in business? The ratings wouldn't be much use if we put the ratings up a whole lot when business is good and then take them down when the business goes into a downturn. What we're looking at in the brokerage industry is a business that inherently has its ups and downs. And we are trying to look through that and say, can the business survive the downturns and prosper? And our view is, obviously, for VCI, is that given the particularly given their business base, given their level of equity, that they can survive the downturn in the marketplace. And I think that's the key part, is not to imagine that they're not going to suffer from the downturn. They clearly will, like everyone else, but I think we can expect them to survive because of their substantial equity base, their management of liquidity, and because of their conservative risk management policies. So I think that's the key points there. Prachi, did you want to elaborate?
Yeah, I think most points have been covered. So just I want to re-emphasize that risk management and the adherence to those risk management policies in terms of, margin requirements, LTVs, debtor and single party or sectoral exposures becomes extremely important. And what we see in VCI's case is that the risk management policies are very comprehensive as well as conservative. Of course, they do have equity investments, and a large part of that is in unlisted securities. But we have always done sensitivity analysis for securities companies, wherein we see that if the market was to go down by an X percentage, how does the company's performance get impacted? What is the kind of liquidity it would be having at the end of this sensitized scenario? And what we see in VCI's case is that the situation is still comfortable, and we are quite satisfied with our rating category that we have offered for the company for the reasons that have been mentioned earlier.
Thank you, Prachi. Probably the people think, when talking about securities company, they always thinking about the equity market or index up and down every day. And of course, the earning model by securities brokerage firm now is quite diversified, as we presented and to the audience.
I'd just like to add one more point here, is that of course, let's say in the case of MBS, to the investor the rating appears at an A category. It needs to be, as Kwan mentioned earlier, be viewed in conjunction with the standalone rating. And to give you an example of ratings in India, a lot of securities companies are held by large banks. And because there is a high moral and economic linkage that these companies, the securities companies, have to their parent, the ratings are notched up at a fairly high level. In some cases, it could be in the high safety ratings, which is why, it's important to look at the ratings both at a standalone level as well as at a issuer rating level.
Thank you, Prachi. We have few questions here. Maybe we and some question to the company as well, to Viet Capital Security as well. But I think I should pick up one question from audience first, and then we go for the question to on VCI specifically. There's one interesting question here, number Three, yes. So why VCI and also MBS are not always on the top 5 brokerage firm in Vietnam? So why they are rated so high? So can top 5 market share player with will have AAA ratings? So Quân, do you want to take this question from the audience? They send to us when they do the registration.
Yes. Sorry. Sorry, there's some small technical issue here. Okay, I'm back. So first of all, the A minus. I mean, obviously, the like I said before, VCI and MBS, they are not, okay, they're not in top 5 in terms of market share. But market share is not the only factor that we look at from the credit risk perspective. Obviously, when I was going through the framework before, I was talking about how, when we look at business position, right, then market shares definitely play a major part in business position, but that's only one modifier. We also, for credit rating, we have to look at the whole picture, where we're that's why we have the 4 modifiers to cover these fields. And for and if you can see, as there are many cases in company that are in top in terms of market share, but maybe their earnings are not really high. There is then it will affect their overall credit profile as well. Or if they have very high market share, but their risk appetite is high in their investment and their corporate bonds holding, then that will also affect their credit score. Or if they have some liquidity issues that we identify after we've done our projection, then that will also affect the rating as well. So yes, if you look at the distribution in the slide before, you can see, these among those 58 companies, they go all the way, their SICP distribution go all the way from A to BBB to BB minus. And yes, there are some company in the A category that, they have a top in market share, but surprisingly, some of the companies, they are in top 5 or top 10 or even top 5 market share, but they're not in the A category. So and obviously for issue credit rating, we also look at external support as well. So some companies, they will have positive influence from the parents, while some company may actually have negative influence from the parent as well. So that's something that we have to look at case by case.
Thank you, Quân. Actually, the market share, yes, is not the only criteria when we look at and assessing the from the rating perspective. And it depends on the strategy of the player by player. Some, they are the market share pursuer, and some they are not. So depends on, and what we care more is about, the long term and the efficiency and the credit risk to creditors as well. So I think yes.
Just to elaborate a little bit on Mr. Quan said, and to be very clear about this, it's highly unlikely any securities company is going to be rated AAA unless has the virtual guarantee of a AAA rated player. As we were saying before, it's an inherently securities firms are an inherently risky businesses. They're very volatile, and they just don't have the industry characteristics that support a AAA rating. So we need to be clear about that and be very clear about the expectations about where securities firms, no matter how good they are, and VCI, for example, is very good. But we have to be very clear that the nature of the business itself precludes these companies from getting to the top of the rating scale, no matter what their market share is.
Thank you, Anh Paul. So we have few questions here to I think quite specific to VCI. So I think we have around 20 minutes left. So maybe let's spend some time with the company here, VCI. So V, are you there? Or are you there for taking up some question from audience? Hi V. We couldn't hear you.
Okay.
Okay, got it. We have few questions from investors sent to us before this event. I'm not sure whether you are willing to share, but there are some questions. May I read out here? What are the impact from the new decree 65 to the investment banking business by VCI? I think they mean the corporate bond.
Yeah.
And the second, they ask about the exit plan. I mean, when you are going to sell the IDP, the investment item is quite significant on the investment portfolio by your company. And the next two questions quite specific. What's the financing plan or issuing the new FC foreign currency bond in the time to come? And I think the last one is quite specific about relationship between your company and the Viet Capital Bank. So why do you have the mother bank security, but the trading client could not be integrated with the banking service like some other, I think. So can you have share some, maybe depends on your confidentiality policy. So can you share your view or answer to the question they ask, if possible?
Yeah, thank you, Anton. First of all, thank you, FiinGroup team, for having us today on the webinar. Also, thank you all of our attendees for joining the webinar today. So there's a lot of questions. I believe the first question is regarding Decree 65, which is the corporate bond, the new decree for corporate bonds. So as FiinGroup team has already shared in previous sections, the Decree 65 actually just the making adjustment as well as more addition regulation compared to the old decree. And we agree with FiinGroup teams that these changes and additional regulation in Decree 65 do and will help the environment, the corporate bond environment, and also the market participant to have a more sustainable development for bond market and also for financial market in general. So we do believe that this is a very encouraging move for the market in general. For VCI in specific, our IB activity has not we do have some activities for bonds regarding our IB department, but it's not yet a deep and broad activity yet for our investment banking segment. However, we do see a lot of potential from these from the bond segment, and therefore we will be very open for new opportunities, but also very selective on choosing the corporate as well as how we structure the bond, as well as how we structure and sell and advertise the corporate bond to our clients. So I think in summary, I would say that we are open and we are very eager for new opportunity within bond segment for VCI specific, but like any other different segments of our company, we'll be very careful and prudent when we approach the business. I hope that answers your questions. So the second questions, I believe, is regarding IDP. So for VCI, we the way we approach our investment portfolio is that we have a part of it is prop trading, the traditional prop trading, and then we have a part of our investment portfolio is delicate for long-term investment. And when we say long-term investment, it means that we go out in the market and we find companies, not listed companies, that we believe to have to to benefit from a future trend in the next 5, 10, 20 years. And we make an investment in this company, and therefore we hold this company for very long term so that we can realize the growth and the potential when these companies grows over the next 5, 10, 20 years. So with that kind of approach, our IDP investment, as well as other investment, long-term investment in our VCI portfolio, we want to keep it long-term. And for IDB in specific, we haven't had any plan for exit yet at this moment. Obviously, in the future, if the company reach our expected returns, or we believe this is a good time for exit, and we will consider the option. But for now, for IDP, we doesn't have exit plan yet.
Thank you, V.
Yeah. Can you remind me of the third question?
So next question is a financing plan. So is the VCI planning to issue more foreign currency debt in the time to come or not? Yeah.
So most of our previous offshore FX denominated loan, mostly all of us USD denominated loan, around 150 million USD. Most of the amount is used to fund margin lendings as well as other activities of the company. Our approach to this is that we will continue to seek for low cost offshore funding to service our activities. However, we are, like I mentioned before, we will be very prudent in taking more debt because we want to make sure that our profitability and the efficiency of the debt that we borrow should be maximized. So this is one of the reasons why you see that VCI is one of the very few securities company that haven't had new capital raising over 2020, 2021, and 2022, because in our philosophy, we believe that using debt financing, especially when we are at a very healthy and low gearing level, then using that to finance our margin lending and other activities would be a more efficient way to our shareholders as well as to the company. So that is why we are very keen on more opportunity to take on offshore loan. But before we take on any other new loan, we will make sure that the use of fund is the best of the company and our shareholder.
So how about the last question about the integration between the banking partner and the securities?
So this is a very old, but sometimes it pops up, is that big capital banks has any kind of support or business integration with us. So we want to take this opportunity to be very clear, is that Big Capital Bank and Big Capital Securities, VCI, is a two separate and independent entity. So we do not receive any kind of special treatment, or we don't have any kind of integrated activities between the two entities. So that is one thing that I want to be very clear. We, as VCI, we do have some cooperations with other banks. So we have cooperations for additional services to our client with banks like BIDV, Techcombank, VB Bank, and some with big capital banks, but more only on the corporate cooperation side. So there is no ownership integration or business integration between big capital banks and big capital securities.
Thank you, V. So I hope it's clear to the one who put the question to us before this event. And we still have few questions, but now I would like to open for direct question. Any direct question from the audience here today?
Yeah.
So anyone from the audience here would like to have open up your mic or your VCL and talk with us or put question to us or the company VCI here. Okay, so it seems to be no. So I would like to pick up one question from the live chat here. So there's one question here. Hi, FiinRatings securities service sector company are raising their outright capitals. How will activities affect their credit ratings? I think this is simple. The more capital from the owner's equity, the lower leverage. So I think, of course, for the rating, it depends on many other factors and criteria as well. So, and we have few questions, but it's quite generic question. So we have one technical question here. Not sure Kwon or Prachi want to take it. Do securities company in Vietnam have equivalent to risk-based capital management, especially for their unrated or unlisted bond holdings? And how do they mark to the market in their books, given the limited or no liquidity for secondary bond trading? Or let me answer this question. So yes, there's a number of issues for bond market here, secondary market, not yet, except for around 30 bonds listed on Hanoi, previously Ho Chi Minh City Stock Exchange, and thousands of bonds remaining private bonds, and no references for pricing. That's number one. Of course, liquidity is another issue. It's mostly over the counter between the clients and the underwriter or securities company. And between the investor and the issuer, they trade privately and no official market for that. That's why the pricing is mostly based on the cost historical, based on the coupon and the repayment schedule. Of course, some of them are using our rating results and for pricing to comply with the international risk management practice and so on. But I have to say, based on our observation, risk management for bond here is quite premature and depends on the strategy of the company by the companies. Like VCI, they haven't got the exposure much in the corporate bond, but some other, they have a big exposure, not only, and some other, they have an exposure on the private bonds. It means not listed company or not listed bonds. So the risk for liquidity and the risk for those private bonds generally higher. So we have shared our view on throughout this event today. So that's very critical areas investor or creditors or your organization need to care about when assessing any Vietnamese securities company, not only the prop trading, but the bond portion as well, and credit risk and of course liquidity risk to the company operation.
Yeah,
so
I'd
any
like to
yes.
add here that, of course, like you mentioned, credit risk would be something that we would assess while looking at the bond portfolio. And, it's important that we look at the duration if there has been any mismatch in the duration for the bonds in comparison to, the company's assets, as well as, the kind of repayments that are due. So we just need to be making sure that all of that is aligned. So it's not only the underwriting or the inherent quality of the bond, but also these mismatches that we would be assessing.
Thank you, Prachi. Hi, V. We have one question here from audience for you. Not sure you want to take up. So can you tell me what's the main reason for VCI to have the credit performance rated while it's not legally required? And what does VCI benefit from credit ratings? You want to share why you engage us to do the rating, or... We couldn't hear you, Vi.
Oh, sorry, because you unmute us.
Oh, really?
You muted us. Okay, so yes. So regarding the why we doing credit grading for ourselves, if you go through the circular 153, which is now replaced by decree 65, you see that the intention of the regulators regarding bond market and in general is that in the future the regulator will require companies, brokerage houses, and other bond issuers to have credit rating. So for us, it is a sooner or later event, and therefore we, as one of the leading securities company in Vietnam, and also we want to expand our bond business. We want to be the pioneer in complying with future regulations. So that is why we're taking up on credit rating. We believe that with our credit rating, we will create a more level playing field between us and other securities and other bond issuers, not just within the securities environment, but and also with a brokerage house like us who have a credit rating. We believe that it's going to increase our clients' confidence in VCI and in our products, as bond products. Also, we are working with a lot of foreign institutional clients, and also especially individual clients, high net worth individual clients. And in the future, if we want to expand our bond business for both institutional or retail, then we believe having the credit rating is a plus in our services that will help clients to have more confidence in us, especially after a lot of events that we already witnessed last year and in the beginning of 2022. So we do believe that having credit rating going to increase our credibility and confidence of our client in VCI.
Thank you, Vi, and thanks for supporting us and supporting the rating industry development. But actually, I would like to share a little bit further our rating. We have been rating 12 companies, and many of them, the rating requirement come from either the lender, creditors, or the shareholder. For creditor, it's very clear the value. They would like to have some independent view about the companies. Why they are not enjoying any much upside potential. And for shareholder, especially the major shareholder, they would like to avoid the dilution because as long as the credit profile rating is clear, they have a better chance raising the debt on the debt market, but not the new share issue and causing the dilution to the existing shareholders. Thank you. We have one question directly for VCI. The lead analyst, Hoàng, you want to take, or Vi? In case of foreign fund inflow into Vietnamese equity market may be low due to the reason, the Fed policy, meaning the increase in the interest rate environment, and how that impact the rating of VCI. Maybe first to rating analyst Hoàng, because you mentioned during your presentation is VCI is top market share on institutional brokerage clients. So this question maybe come up from audience here. So we want to address that, Hoàng.
Okay, excellent. Thank you for the very interesting question. So I think it will have the impact for VCI, but the impact I think is very limited. Also, as I have mentioned, I think the business model of VCI is well diversified between segments. So the impact of Fed policy to the foreign fund inflow, I think this only have impact for brokerage service segment only. on the other hand, the business model of VCI in the most of their operating income is coming from investment activities, coming from IB and advisory service, and also the margin lending. So I think it will have some impact, but overall not much big impact to VCI. That's my opinion.